5453 or log on to nagarajhomes.com.
Hello, everyone. Welcome back to the Real Estate Show. I'm your host, Nagaraj Annaiah, your trusted Bay Area Realtor. And today we have a fantastic episode lined up for you. Joining me is a very special guest, April Held. She's a mortgage consultant with a wealth of knowledge in financing, lending strategies, and helping home buyers navigate the ever changing real estate market. Whether you are a first time buyer, an investor, or just someone looking for understanding how mortgage rates impact your home purchase, April is here to break it all down for us. Hello, April. Welcome back to the show.
Thank you, Nagaraj.
Listeners, if you have any questions on the real estate, mortgage, this is a show you should never miss about. And you can give us a call. We are live on a Bali 92.3. You can give us a call. Our studio line numbers are 877 Bali 92, 877 Bali 92. April, let's talk today about in early March 2025, right? President Trump implemented significant tariffs on imports from Canada, Mexico, and China, aiming to address issues like illegal immigration and drug trafficking, right? So, how is the market going on, especially in the mortgage side?
So the mortgages have been doing very well. Stocks obviously have been suffering some as a result, but we have been holding very well with mortgage-backed securities, which have been helping rates. So they've been staying very steady. They were doing really well for the last couple weeks and holding steady since then. So we've definitely seen in a good place.
I think, see, especially since the market is so much volatile now, right? Like big players are giving each day a different statement. Market changes so much, so people jump into a conclusion so fast. So, are we seeing any early warning signs of mortgage crisis similar to a 2008?
No, nothing at all. If anything, we're seeing a lot of people in the market, a lot of demand, and prices actually have been, still increasing. So I don't see anything that indicates that.
But what we have done better from 2000, there was a lot of learnings from 2008, right? That's what people don't understand, especially home buyers. What has changed, especially in the lending practices, right?
Yeah, actually having to qualify people and using the ability to repay is the major thing now in mortgages, which was not the case back then. So that was kind of a perfect storm back in 2008, which had a lot of factors which will not happen as far as many of those factors will not happen again.
Yeah. See, listeners, if you have any questions on the real estate or anything on the mortgage, this is the show you should never miss out. Give us a call. Our studio line numbers are 877 Bali 92. Myself, Realtor Nagaraj Annaiah, and I'm talking to April L on the mortgage crisis. So, how is especially rates are doing right now, April?
Rates are great, especially 30-year fixed interest rate, the fixed rate, long fixed rate mortgages have been doing really well. They've come down, gosh, at least 0.5%, maybe a little bit more over the last, I would say, month or so. So we've really sitting in a great place. ARMs also are doing well, but they rely more on the T-bill, which is a little shorter term instrument. So those have had some movements. They're sitting in a good place, but they don't have the big swings that the 30-year fixed mortgage might have.
Okay. So the rates wise right now for ARM rates, 5-year ARM rates are like around close to 6%.
That's correct.
6%. And how about the 30-year fixed?
Sitting about 6.5% today.
Okay. So now let's talk about, since the market is so much changing and volatile, a lot of folks are dependent on the down payment.
Yes.
Correct. So if they're into a journey of house buying, especially, and they are not reserved, or like basically they're most of the down payment are coming from the stocks. How do they plan out, like, because they say like they start the house search right now and see the market is dropping now, oh no, let me take it back because I don't have a down payment, but the market houses will not wait for them. What's the best strategy to plan for it?
Yeah, that can be a hard one. Sometimes, we can do a HELOC on this and back it up and put a little bit less down, and then of course, when stock prices come back up and are a little bit better,
Mhm.
then they could get rid of that debt and sell their stocks.
Mhm.
But really, kind of preparation ahead of time is really important because it is, right now we don't know where the stock prices are going to be. So that's definitely something to discuss, and probably something to discuss with their, financial person if they happen to have one.
I think the best strategy, what I've seen is, especially like April, like if somebody is planning to buy a house in 10, maybe in a couple of months or in a 1 month, and and if they're sure to buy a house, right? I would say minimum 10% of the down payment, sell the stocks and
Mhm.
keep it aside, because you can't depend on the market conditions and decide on the house what you get, because there are only few homes coming in, right? So instead of selling it for a 20%, because there are only, again, the 20% maybe is needed for the people who doesn't qualify. But if they're qualifying for a 10% down, that is where the expert like me and you can help them out, right? Like when they sit with the mortgage consultant, they need to tell them, like, with the 10%, what's the maximum purchase price they can go for it, and 20% was the maximum purchase they can go for it. Keep the funds separately,
Correct.
and don't keep it until the last moment. And always, as we know, right, like as soon as the offer gets accepted, even the earnest money deposit needs to be put in within a 1 day.
Yes.
So keep the funds separately and talk to the expert like me and April on the mortgage, so that we can basically strategize how do we go about it. And we can't decide based on the market situations.
Correct. And at least keeping part of that ahead of time, at least will diversify when you're actually selling your stocks.
Yeah, because 10% of, let's assume for even for 2 million, I think the maximum purchase price you can go up to 2.5, right? With a 10% down. Yeah. So since you're going even with a 10% down up to a 2.5, you can just keep a 250K separately.
Yep.
So that way it is like where you don't decide based on the market conditions. So listeners, myself, Realtor Nagaraj Annaiah, and we are live and we're talking to April Held on the mortgage and the real estate. If you have any questions, you can give us a call. Our studio line numbers are 877 Bolly 92. And if you're thinking the market might crash or the house prices might crash, do give us a call. I would like to hear about it, and I would like to hear about your house buying journey too. Like if you put in offers recently, and if you think the offer was not getting accepted, I would like to hear about it. Do give us a call. Our studio line numbers are 877 Bolly 92. April, I was talking to you in previously before this show, right? Like how the market is become crazy right now. In a Sunnyvale recently this week, it was listed for a 2.5 million, and the house was sold and it got in a 14 offers. House was sold for a 3.2 million in Sunnyvale. That is also 2,500 square footage,
Wow.
4,000 lot.
That's crazy.
Okay. In this, let's take up a one call, April. Welcome to the show. Your name, please. Yeah, we just lost. Give us a call back. Our studio line numbers are 877 Bolly 92. Anything on the mortgage, real estate is more than welcome. So, April, like the reason I was telling you about how the home prices are going now, right? Like it is went more than what 700K than the list price. Based on the comps, it can go up to only 2.9 million. So 200K is more or close to a 300K more than the list price.
Wow.
So comparable price. So what do you do in these scenarios, right? Like, and especially in these scenarios, you need to plan out well how much the appraisal needs to come, and extra funds needs to be saved also. You can't just blindly go put an offers in these cases.
Absolutely. Yeah. You have to look at, and we can always look at those strategies with, if we expect, the appraisal to come in less, what does that look like? What does that mean for the person? But yes, you have to have that extra money.
Yeah, I think, see, one more thing, what is my personal experience, what I'm noticing in, right? Especially the Redfin Zillows, especially the Redfin is the one who's basically creating all this numbers, crazy numbers, because when the Redfin are like is just an AI based. So since it's an AI based, let's take up a call, April. Hi, welcome to the show. Your name, please. Hello.
Yeah, my name is Maheshwari.
Sorry. Okay, go ahead with your question, please.
Yeah, my question is about the valuations. A lot of times I think people put a lot of emphasis on things like comps, like valuation of homes that were sold say 3 months ago, 4 months ago. I get it. You need some market benchmarks and all that, but I also feel that some of these comps can be a bit of a self-fulfilling prophecy because they don't reflect the current market conditions, in either direction. And like right now, I feel like the competition on the buyer side is not that high, but anytime I go and look up any home or try to ask my agent, hey, what would be the fair market value? I think in response, I only get the comps, which might be 2 or 3 months old. So any advice or tips from experts such as you as to how I could think through valuation or negotiation?
Yeah, I think it's a well said question. I think that's what we were discussing right now. I was just giving out an example on the Sunnyvale property, because what's the problem was happening right now is the Redfin and the Zillow's estimates, right? That's the most common visible comps for most of the home buyers. Okay, even the sellers also the same numbers are available. Since it's being an AI based algorithm, they average out to it like basically a per square footage. They just take the numbers 2 million just per square footage. They come up with, if it's 1,000 square footage, they come with a $2,000 per square footage. So any house which lists, then basically they go about it based on the next houses. And one more thing is they don't even consider the house has been upgraded or not. There is no data to consider the house has been upgraded. So basically the three things goes in. One is the house is not considered, upgrade is not considered, and one more thing is considered traffic. How many people are saving that house, and how many people are going and visiting tour, requesting for their tours. So this system is completely basically screwed up because of this home values are showing up high. But in this scenarios, especially there are two kinds of buyers. One is like aggressively, whatever the comp says, they go take it. Right, that's a one scenario. It's like where the home buyers, because home buyers need it. The only few homes are listing in that market right now, so that's why people home buyers are go for it. But some conservative home buyers, in this scenario, what they do in that scenario, right? Like I would just say for the home buyers, instead of going for the homes which has been listed just now, try to wait for that homes to sit in the market for a 1 week or a 2 week. Then it would be a right way to go on basically talking to the seller or the seller agent to understand what is the price they needed. And most of the times I've helped my client also to go with an appraisal contingencies. April also has helped me out on that, because we doubt sometimes the appraisal is not coming. We just go put it an appraisal contingency. But if the house is hot and just has been listed right now, the seller agent will not take it. So home buyers should be basically thoughtful. How do they approach? Just don't go based on all the homes which has been listed right now. Does it answer your question? Like, do you have any follow-up on that?
That was very helpful.
Yeah.
No, that was very helpful. Thank you.
Thank you, and best of luck. Yeah. So listeners, we are live on Bolly 92.3, and if you have any questions, do give us a call. We'll come back quickly. Just take a quick break.
If you are selling your Bay Area home, maximize your profit and minimize your stress with Nagaraj Annaiah, a mortgage and real estate expert. Nagaraj Annaiah understands the unique challenges Bay Area sellers face. He'll expertly price your home, market it to the right buyers, and negotiate the best possible deal. For a free consultation, call Nagaraj Annaiah today at 858-880-4577 or visit nagarajhomes.com.
Welcome back to the show. Myself, Realtor Nagaraj Annaiah, and I'm talking to April Hill, the mortgage consultant and an expert in the mortgage. If you have any questions, do give us a call. Our studio line numbers are 877-BOLLY92. April, now let's talk about in this circumstances where the market is changing so much, right? What role do the adjustable rate mortgages play in today's housing market risk?
I still think that adjustable rate mortgages are a very good option. We really anticipate the market, the rates to come down in the future. So it really is a good way to help you qualify for a little bit more, but also help save on some interest you're going to pay in the meantime.
Okay, let me take one more call, April. Hi, welcome to the show. Your name, please. Hi, we just lost the connection. Do give us a call back. Our studio line numbers are 877 Bali 92. Anything on the Bay Area real estate. If you're worried about should I buy, sell, are you a first-time home buyer? This is the show you should never miss out. Do give us a call. We have one more caller. Let's take it up, April. Hi, welcome to the show. Your name, please. Hello.
Hi, can you hear me?
Yeah, I can hear you. Please go ahead. Your name, please.
Yeah, hi. This is Vishal. I have one question.
Yeah, Vishal.
I was looking for investment property in near Mantika or River Island side. And what do you think? Like, is it a good time to invest in a property with a 20% down payment?
Yeah, thanks, Vishal. It's a great question. Let's start with April. For investment properties, what's the minimum down payment, April, needed?
20% down.
Yeah, okay. So, and how is the debt to income ratio is calculated? It based on the future rent, or how has it been calculated?
We can use 75% of the market rents for the property.
Okay. So basically the 75% will be considered for the investment properties.
That is correct.
Okay. So now coming back to these cities, right, Vishal, like, yeah, it's certainly Mantika, Stockton, and even the Oakland sometimes for the rental properties, right? But again, which part of the Oakland? Because I always keep telling like investment property should not be not necessary to be in the better locations. But okay, so all these properties, especially where it is cities which is coming up, it's a great location to invest. But watch out, are you looking for a duplex, or are you going for a single family homes also? And again, depends, are you considering for an appreciation, or are you considering for a rental purpose? And the third thing is, always, I think we had last week also the show on, we had mentioned about the how can you do the tax write-offs, especially when you're doing in a that also I have discussed about it. How do you depreciate it for the investment properties? Do consider that also as an always a great asset in all these upcoming cities to invest.
Actually, yeah, I'm looking for single family, and definitely I look for appreciation as well as rent.
Okay.
Right? So
it's a great city, especially if you have seen the Lathro, how it's grown up, and especially even the River Island. Now the prices for the River Island, if you don't believe it, bigger houses are selling for more than $1 million. It used to be in time frame April, like around 2021, 22, less than 700, 800 it used to be going. Now the home values there, even in a River Island, is of more than $1 million. So if you have seen it, if you have seen any cities, upcoming cities, the prices are not going down. So always consider this Mantica also, and always when you're considering for an investment, try to see if it's an house as an ADU option. Okay, the ADU option always gives you a better rent, or a junior ADU nowadays. It's like most of the places as a junior ADU also. If that is there, it's always is for you a better rental stuff it will happen. And one more thing is, when you're looking for investment properties, look for a bigger lot also sometimes. Everything doesn't go hand in hand, but look for that kind of options also with a bigger lots.
Do you have any? Yeah, thank you so much. And one more thing. So do you think like this Mantika is a good city for appreciation in the future? Because I saw like there are thousands of new homes are coming over there, and I'm not sure how property appreciate will go, right?
Yeah. See, nobody can't predict the future. Okay. It is like only basically is how long you can hold the property. That's what is important. If you're holding for 10 years or 5 years, then always when there's a downturn happens, you will recover back. And because April herself has seen as 2008, and she's a more expert than me to talk about how was the situations on the 2008. People who were got basically scared and sold the homes, they don't have any homes right now. But people who basically had money and bought during a downturn price, they already have multiple properties. I've seen properties, April, like people are holding for 10 properties, 15 properties around.
Agreed.
You told me also like before the show, like the scare part, right? The scare or like how much you will lose, that sometimes make hard in the investment properties. Always believing in yourself and going in the right direction sometimes will help you out, Vishal. Any other
Right.
follow-up?
Yeah.
Any other follow-up, Vishal?
Yeah. Thank you. Thank you so much.
Thank
so
you,
much.
and best
Really
of luck in your house
appreciate it.
buying.
Thank
Okay.
you.
Yeah, listeners, myself, Realtor Nagaraj Annaiah, where we are help you to build your wealth and plan for your future. Do give us a call. We have still 4 minutes left in the show. Our studio line numbers are 877 Bali 92. Anything on the real estate, anything on the mortgage. This is the show you never should never miss out. So April, coming back to that one scenario, what we were discussing, right, where we are paid more, but the home values are like basically comes out, the appraisal comes out less. Let's take up a call, April. One more call. Hi, welcome to the show. Your name, please.
Yeah, this is Amit. I had called up earlier.
Yeah,
I had the question about comp. So I have another follow-up question. Not follow-up, a different question.
Yeah.
I'm currently looking for a home, single family in the Mission San Jose district.
Okay.
It's a very, very competitive market. And I know my question is can get a little bit personal here. It's a personal choice. But do you have any thoughts on how, in general, people think about the best schools, the districts which are like really competitive from a pricing perspective versus, some of the, tier two, schools where the housing market may not be as competitive. Like, what is your expert opinion on those things?
Okay. I think, see, I would just give my client's experience on that instead of sharing on that, right? Like, see, mission is, as you said, is tough. Right now, is too competitive. As you said, like, I went into, we closed one in 3.05 million fixer upper April. It was a fixer upper. We closed it for 3.05 million. That was also, it was lucky because my client waited for 8 months. 8 months, and we closed it for 3.05 million. In this tough scenarios, right, like how do you get the homes, right? Like, see, that is where the comes down to how creative you are. Can you do like kind of in a tier two, like other cities like Ardenwood area? I'm just giving out, I'm not calling out, I'm just giving out an example like Ardenwood area, because right now the Ardenwood areas are becoming crazier. And what about the Santa Clara? Santa Clara city is also like, school used to be so bad right now, but it used to be, but there's an alternative always, like a charter schools would be an alternative. That is where to go talk to the neighbors around or friends around. Are there any alternatives in that neighborhoods? For example, are there any charter school? Most of the charter schools, as you know, it's a free schools. Okay, it's not in a basically you need to pay the fees, but most of the times are free schools. For example, in Santa Clara, right now we have Millicans Elementary School, which is a free school. That is where the going to the talking to the experts, right? They can help you out. But I think we are running out of time. Vishal, do give me a call after the show, and we would basically would like to continue on this. I'll give out my number. Do give me a call after the show, Vishal. Hello. Yeah, I think.
Sure. Thank you.
Yeah, do give April. If somebody wants to reach out to you, what's the best way to reach out to you, April?
Best number is 949-306-8100.
I think best way to reach out to April also I'll give out to you. You can give me a call. So my number to reach out to me is like go to nagarajhomes.com, click on a WhatsApp icon, and that's the easiest and best way to reach out to me. Any questions before you invest on the real estate? The best person to reach out to me to reach out to me so that I can guide you, so that way you can basically as we were discussing earlier, right? Any real estate investments needs to be done thoughtful and basically made in a right direction. That's where the expert makes a difference. So if you want to reach out to me, go to nagarajhomes.com and click on a WhatsApp icon, and you can connect with me. Thank you so much, April, and have a wonderful evening to all the listeners out there.
Thank you, Nagaraj.
Thank you.